The FedLife podcast is presented by Serving Those Who Serve, a fiduciary, fee-based financial planning firm serving federal government employees and retirees all over the country. This podcast is for informational purposes only and is not intended to be taken as financial advice. All listeners should consult their personal advisors before taking any action. The opinions expressed by our hosts are their own and do not reflect the views, policies, or position of Raymond James. Securities are offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services, Inc. And now, here are your hosts. Dan Sipe serves as a branch manager for Raymond James Financial Services and Serving Those Who Serve. Ed Zerndorfer is our guest and federal benefits expert in the space.
Hello, welcome, and Happy New Year to our first episode of 2026 of the FedLife podcast. I'm your host, Dan Sipe. Additionally, I'm the branch manager here at Serving Those Who Serve and Lee Sipe and Associates. I'm going to begin, as I always do, by saying thank you for taking the time to listen, but above all, thank you for your service. To the government, to the country, to me, to everyone. You don't hear it enough. You're always going to hear it here. The other thing you're always going to hear here is the guru, Ed Zerndorfer. He's back with us once again as part of our ongoing mission to reach, teach, and serve you. As we always like to do, we're following Ed's FedZone articles, and this one is a doozy. It's a two-parter. So we're talking about something that's been coming for a while, and it's finally here, and that is the brand new TSP feature. The federal employees will be able to do Roth conversions within plans. So today we'll cover what it is, how it works. And then in our part 2 broadcast, we'll cover the important questions you need to ask before you decide to do it. So either way, you don't want to miss either installment. I'm going to urge you to head over to the FedZone, fed-zone.com, and you'll find Ed's articles are up. It's great if you have those in hand as we go through them, or the other way you can look at it is we've already taken your notes for you, so you can focus on the broadcast. So, Ed, the TSP has finally announced that there are Roth TSP in-plan conversions coming. So when does it start, and what is it exactly?
Yes, Dan, it will start on the TSP announced on January 28th, 2026. Federal employees who have traditional TSP accounts will be able to convert their traditional, some or all of their traditional TSP accounts to the Roth TSP account. I'm going to ask you a question. I'm going to just comment on what you just said. How many times have you and your fellow advisors at Serving the Server have gotten this question? I would really like to convert my traditional TSP to the Roth TSP. You know, I heard I can make traditional IRA conversions to Roth IRA conversions, but I really would like to take some of this traditional TSP and convert to Roth TSP. And what has been the answer?
Can't do it.
Yeah, well, I got this question. I don't know. Well, finally, the day has come. All the information is out there, and the TSP has given the okay that starting January 28, 2026, anybody who has a traditional TSP account will be able to convert some or all of that traditional TSP account to the Roth TSP. So that's the magic day, January 28th.
Gotcha. Okay. Now, previously, Ed, as you mentioned, it technically couldn't be done within, but there was a workaround that was a little bit complicated. Why don't you talk briefly about that and explain why this new in-plan is such a big deal?
Yes. Until this change here of the TSP, of converting traditional TSP to the Roth TSP, the only way an individual with a TSP account, traditional TSP account, could convert some of their traditional TSP to a Roth IRA. That they were allowed to do. Now, how would that happen? Well, first of all, the person would have to, the TSP participant would have to be at least age 59 and a half. Whether they are an employee or a retiree, they have to be at least, say, 59 and a half. And they would have to do the following. It would be a two-step process. Number one, they would have to request a direct rollover of a portion of their traditional TSP to a traditional IRA. I repeat, to a traditional IRA. They were not allowed to request a direct rollover of a traditional TSP to a Roth IRA. Why?
Gotcha.
Because you're going from apples to oranges. Let's understand. With the traditional TSP, everything is pre-tax. All contributions that have gone into the traditional TSP through the years have been with before tax salary. The earnings that have accrued in the traditional TSP have not been taxed, so that when one pulls money out of the traditional TSP, everything is taxable. So if one wants to transfer a portion of that traditional TSP to a Roth IRA, keep in mind, with a Roth IRA, all qualified withdrawals from a Roth IRA are tax-free. The IRS is not going to say, okay, we'll forget about the fact that the money you put into that traditional TSP with all pre-tax dollars, we'll just forget about the tax. No. So that is not what is called a proper rollover to go from traditional TSP to a Roth IRA. So you have to take what's called an immediate step and request a direct rollover of a portion of your traditional TSP to a traditional IRA. That's always allowed. Now, when I say a direct rollover, that means you don't get the money. The TSP doesn't get the money. The money is sent from trustee to trustee, from the TSP to the IRA custodian, without going into the bank account of the TSP participant. It goes into what's called a rollover traditional IRA. And at that point, the traditional TSP participant can request to do a Roth IRA conversion of their rollover traditional IRA and pay the tax. That is a proper rollover. So you're going basically, Dan, from A, traditional TSP, to B, rollover traditional IRA, conversion,
Gotcha.
to C, Roth IRA. With now, you don't have to do it now with the traditional TSP. With the traditional TSP, this opportunity to do an in-plan Roth TSP conversion, you don't have to take any immediate steps. It goes directly there, but it still has consequences. Gotcha. As we'll find out.
Absolutely. And folks, hold on. Let's not mash the gas just yet, because Ed, before anybody rushes out to do this on the 28th, you lay out 5 important questions that our TSP participants should ask themselves. These all relate to taxes. So can you walk us through those questions?
Okay, I'm going to say them slowly so individuals listening can understand what's going on here. So I'll say it slowly. First question: how will the conversion affect the traditional TSP participants' adjusted gross income, AGI, in the year of conversion, to the extent of possible loss of tax credits and tax deductions?
Gotcha.
Let's keep in mind, Dan, that one of the real virtues of the traditional TSP is the fact that the money going in is pre-tax, so there are tax benefits when you contribute to it. When you convert it, though, you convert your traditional TSP to the Roth TSP, the amount that you are converting is going to be included in your income for that year. It's all taxable in the year that the amount that's converted is all be included in your adjusted gross income in the year of conversion. Many deductions and many of I love my favorite, tax credits, are sensitive to one's adjusted gross income. If your adjusted gross income is over a certain threshold, the IRS has thresholds for these things, you could lose those deductions. You could lose those tax credits in the year of a conversion. Also, there's another good buddy out there that I know retirees are familiar with. It's called Medicare Part B. Medicare Part B. When you convert, when you enroll to Medicare Part B, I should say, what you pay for Medicare Part B each year is based on your adjusted gross income from 2 years prior. What I'm saying is that, let's say we have a Medicare Part B beneficiary this year in 2026, federal retiree, has a huge amount of traditional TSP and would like to say, gee, this would be great if I could just convert some of that traditional TSP now and get it over to Roth TSP. Yeah, I know I'll pay the tax, but in future years, that would mean possibly less AGI because the traditional TSP will be included in your, will be subject to a requirement of distribution. It'll all be in the Roth TSP. It will be in the Roth TSP. That'll be mean less R&D 2 years and subsequent years down the road. Here's the problem.
Gotcha.
When you convert that in that year, that means your AGI is going to go up so that in 2 years, your Medicare Part B premium may be larger, maybe higher because you have a higher AGI. You had a higher AGI in the current years. That's something that has to be thought about. Second question. Oh, and this is a biggie. How much federal and state income tax will a traditional TSP participant have to pay on the conversion? Let's keep in mind, Dan, when you convert traditional TSP to Roth TSP, the entire amount that you're converting is subject to federal and state income tax. And here, and we'll talk more about this later, here's a real, for a lot of people, shocker. The TSP does not withhold federal income tax on the first. They never withhold state income taxes on withdrawals, but federal taxes they do. When you convert your traditional TSP to the Roth TSP, any taxes that are due, you are responsible for paying because the TSP is not going to withhold taxes.
Gotcha.
So you got to think about that. Do you have enough liquid assets to pay the taxes due? And also how you're going to be paying those taxes. We'll talk about that later.
Sure.
Number 3, talking about taxes. Will the conversion result in the increase of the traditional TSP participants' marginal tax bracket in the year that they do the conversion? Because if a traditional TSP participant converts a huge amount of money, and we're talking, you could be like $20,000, $30,000, $100,000. Okay, let's say $50,000, $100,000, whatever it is, will be added to your other taxable income for the year, pushing you into a higher marginal tax bracket. Before the conversion, you could be, let's say, in a federal marginal tax bracket of 24%.
Gotcha.
But as a result of adding that income from conversion, now you're bumped into the next bracket, 32%. So you're going to be paying 32%.
Sure.
Number 4, will the Roth TSP in-plan conversion could result in future AGI decreases, thereby decreasing future year? Okay, we talked about this, about the Medicare Part B. I mean, that might be a positive thing to do, is a good reason to do it, because you're paying a lot for Medicare Part B. You have a high AGI. You're paying what's called IRMA, income-related monthly adjustment amounts. You don't like doing that. Is there any way I can decrease those IRMAs when it comes to Medicare Part B? Well, if you're looking ahead, taking some of that traditional TSP converted to Roth TSP will likely result in less IRMA, but in the future. So yeah, that's another factor to keep in mind. That's a positive reason to do it. Number 5, there's another biggie. Does the traditional TSP participant have a sufficient amount of liquid assets, cash? For example, passbook savings account, a money market account, to immediately pay the federal and state income taxes due on the conversions? Now, Dan, when I say immediately, I don't mean a year from April 15th. We're going to find out a little bit later that if somebody, we have some examples, if somebody, let's say, jumps on the bandwagon, let's say on January 28, 2026, oh, I heard this great podcast, I'm all in. I want to convert, I want to go up to that. I'm going to convert $50,000 on my traditional TSP to the Roth TSP. I'm going to do it right on that day, 2 weeks from now, January 28th. And they're all excited. They do it. and they have let's say, and as a result of that, they're in a 22% tax bracket, they owe $11,000 in federal income taxes. Oh, that's no problem. That's no problem. I'll just pay that tax when my taxes are due on April 15th, 2027. Doesn't work
Oopsie.
that way. Doesn't work that way. Federal government doesn't like that. IRS doesn't like that. And the same thing with the state. Let's say they owe 8% estate tax. That's under $4,000. You can't wait till April 15, 2027 to pay the $4,000 of state income tax. You have to do what's called, as we'll talk about later, estimated tax payments.
Yep. Well, actually, we're right there right now, Ed. So TSP doesn't withhold the taxes. That means people need to make estimated taxes. So can you explain when those estimated taxes are due? Because that's a pretty big deal.
Yes. Traditional TSP participants should be aware of the immediate tax consequences of converting traditional TSP funds to Roth TSP. The amount of traditional funds converted are added to the traditional TSP participants' taxable income for the year in which the conversion is performed. This means that the traditional TSP participant must pay income tax on the conversion amount of the traditional TSP participants at the traditional TSP participants' marginal income tax bracket. If the participant lives in a state that has an income tax, then the participant will have to pay state income tax on the amount of traditional TSP converted to Roth TSP. It works to both ways if they live in a state. As I said, the traditional TSP amounts converted become taxable at the time of conversion. Since the TSP doesn't withhold federal state income tax, the traditional TSP participant will most likely have to make federal and state estimated tax payments. Okay? These estimated tax payments are due. This is the key here. Are due. When do they due? By the 15th day following the end of the last month of the quarter in which the Roth TSP and plan conversion were performed. So here's an example. Go back to an example. We had this person who converted $50,000 of their traditional TSP on January 28, 2026. The IRS divides the year up into 4 quarters. The first quarter ends on March 31st. March 31st. When is that first estimated tax payment due? April
Mid-April.
15th, 2026. If somebody did a conversion between April 1st and May 31st, that's the second quarter of this year, then their estimated tax payment, this will be the second quarter, is due June 15th, 2026. They did the third quarter goes from June 1st to August 31st. If they performed a Roth TSP conversion during June, July, or August, their estimated tax payment is due September 15th, 2026. And finally, if someone did their Roth TSP plan conversion between September 1st and December 31st, 2026, the estimated tax payment is due January 15th, 2027. And the same dates for most states, or it's the same thing for most states. For most states, they have the same deadlines to make those estimated tax payments.
Gotcha. Now, Ed,
go ahead.
One of the things that you're pretty famous for is that you put names to these things. So you actually give us a great example with Jessica.
Yes. All right. So here's an example. Example number 1. We have Jessica. She's single. She's in a 22% federal marginal tax bracket and a 7% state marginal tax bracket. On February 10th, 2026, Jessica converts $30,000 of her traditional TSP to the Roth TSP via a Roth TSP in-plan conversion. Jessica's federal income tax liability resulting from the $30,000 traditional TSP conversion to Roth TSP is how much? We take 22%, or marginal tax bracket, of $30,000, which is $6,600. Her state income tax liability resulting from the $30,000 Roth TSP in-plan conversion is 7% of $30,000, or $2,100. What is the due date for making those estimated tax payments? April 15th, 2026. Okay. Now, let me just say something of getting with Jessica. Jessica goes, I really don't have, come April 15th, 2020, April 15th, 2020, I really don't have the money to pay this. I have to pay my 2025 tax liability. I forgot about that. And she says, well, what am I going to do now? What am I going to do now? Well, number one, don't ignore the problem. Okay. Then try to try to get the money together after April 15th. Do it for the next quarter, June 15th. Sit there. What you shouldn't do is wait till April 15th, 2027. Because if Jessica does that, the longer she waits, the IRS will impose what's called under withholding penalty. Everybody talks about, I'm an accountant, Dan, I have an accountant. Everybody talks about the fact that if you have the so-called safe harbors, that if you pay in within 90% of your tax liability during the year, and you could meet an exception to this under withholding penalty. But what individuals don't realize, that 90% safe harbor, you have to pay in within 90% of your liability for each quarter. It's not for the whole year, it's each quarter. Each quarter, the IRS has what's called under interest rates they impose on someone who has a huge tax liability. For that reason, and I emphasize this so much, before anybody, any employee embarks on this conversion, on this traditional TSP to Roth TSP in-plan conversion, I cannot emphasize enough the need to meet with a qualified tax advisor. Don't do this on your own. Also, the TSP will not answer your tax questions, nor should they. That's not their responsibility. And lastly, I know, Dan, you and your advisors have been told this. I used to have a securities license, and I was told this, although with my background, I couldn't, because I'm also a qualified tax accountant, that financial advisors, stockbrokers, financial planners, bankers, you go to the bank for financial advice, go to insurance company. They are not allowed to give you tax advice. So please keep that in mind. If someone out there, employee, retiree, is going to embark on this Roth TSP in-plan conversion, the first step is you have to meet with a tax advisor to go over all the consequences about what's going to happen as a result of this conversion. I also like to follow up with Jessica, because guess what, Dan? Jessica makes another Roth TSP conversion. When? On August 15th, she decides to perform another Roth TSP in-plan conversion. In this case, another $30,000. Okay. And she's in the same 22% tax bracket. I think, keep in mind, the first time Jessica made that first Roth TSP in-plan conversion, we said that she was in a 22% marginal tax bracket. She did that when? In February. Maybe her income went up since 2025. Is she certain that her taxable income is going to be the same? She'll be in the same marginal tax bracket based on taxable income? This is where a tax advisor is very important. She should sit down and do a year-to-date assessment. Because, in fact, as a result of the first $30,000 Roth TSP conversion together with other income, now she's going to do another $30,000. She might be pushed into a 24% tax bracket. So how much tax will she owe then if she does a $30,000 Roth TSP conversion? Now 24% of $30,000. Now we're up to what? $7,200. Okay. So again, and she has an estimated tax payment. When is it due? She does it in August 15th. So when is that estimated tax payment due? September 15th. Can't wait. So again, there's a lot of tax consequences here that I cannot emphasize how important it is that individuals have to, TSP participants have to think about before they embark on these Roth TSP in-plan conversions.
So, Ed, let's jump into eligibility.
Okay.
So what are the requirements there?
Okay. In order for a TSP participant to convert their traditional TSP to Roth TSP, the participant has to have what's called a vested traditional TSP account balance. Now, what is included in the vested? Vested means it's yours. It belongs entirely to the participant. Now, what is included in the vested balance? If you're a CSRS employee, or if you're a FERS employee, or if you're a uniform service member, any contributions you made via payroll deduction to the traditional TSP account and the earnings on those contributions, you are 100% vested. It's all yours. All right. That's part. What else is included in the vested traditional TSP account? If you're a FERS employee, any matching contributions you get, maximum 4%. And the earnings on that, a FERS employee is vested from day one. They don't have to wait they don't have to work for a certain number of years. Now, FERS employees also get an automatic 1% of their annual salary, that's your SF50 salary, contribution from their agency, whether they contribute or not. It's called it's automatic 1%. Now, when are they vested in that contribution as well as the earnings? After working 3 years, Dan, 3 years, a FERS employee is vested in that automatic 1% contribution to their traditional TSP account. All these matching contributions and the automatic 1% contributions always goes to the traditional TSP account and the earnings on the 1% account. And finally, let's say we have a traditional TSP account participant who has rolled over money. What can you roll over into the traditional TSP? Let's say that employee, whether CSRS or FERS, used to work for another company, private company, put money into a traditional 401k plan. They can roll the money they're eligible to roll over the money from the 401k plan, 403b plan. If they have a traditional IRA, that can be rolled over into the traditional TSP. If they have a SEP IRA, SIPL IRA, these are all traditional accounts, can be rolled into their TSP. They're vested 100% in those. They also are part of a vested traditional TSP account, and they are eligible to be converted to the Roth TSP.
Gotcha. And folks, I'll remind you to make sure that you go to Ed's article. He's got another great example in there. In the interest of time, we're not going to be able to dig into that one right now, but do check it out because it answers some really good questions. So Ed, let's now, pivot a little bit and talk about the limits. What's the minimum amount for a conversion and how many times can somebody do it in a year?
Yes, Dan. Minimum amount of a Roth TSP in-plan conversion is $500. $500.
Okay.
And up to 26 in-plan Roth TSP conversions can be made per year. 26. Now, Dan, as you know, there are some traditional TSP participants who have both what's called a civilian traditional TSP account, and they are uniform service members, and they contributed to the traditional TSP also when they were on active duty. And they have money put into TSP. So those uniform services traditional TSP accounts can also be converted to the Roth TSP, and up to 26 minimum conversion, $500, up to 26 conversions can be made. So that's if a person a TSP participant has two accounts, civilian and uniform service account, they can make up to 52 Roth TSP and plan conversions, minimum $500. But I caution you, The more you do, don't forget the three things: tax, tax, and tax.
Absolutely. Absolutely. Okay, Ed, you have a couple of important notes in there. One we'll touch on, one we'll talk about. The first is that married participants don't need spousal consent for the conversions.
Yeah.
But the second one is about RMDs, and that's pretty chewy. So tell us a little bit about the RMD side of this.
Yeah. Certain actions that a TS participant performs need spousal consent. In the case of a FERS employee, give me an example. They want to start withdrawals when they want to take out a loan. Their spouse has to be notified, and the spouse has to consent in writing for that to happen. If you are covered by CSRS, your spouse will get a telephone call to get their approval. But spousal consent is not required for either CSRS or FERS employees when it comes to Roth TSP in-plan conversions.
Gotcha.
I can go ahead and do it. Regarding RMD, for those TSP participants, traditional TSP participants who have reached what's called the required beginning date. What does that mean? It means that they have reached the age, they're retired, and they've reached the age in which they must withdraw a minimum called the required minimum distribution from their traditional TSP account. They have to do that every year. For example, now the required beginning date is April 1st, following the year you turn 73. So let's say we have we have a traditional TSP participant who is now 75 years old, retired, and they got a huge amount of their money in the traditional TSP. And then they really got this RMD. This is killing me. I've got to take out $50,000 a year. Boy, this is really not good. I know what I'll do. I'll take some of that traditional TSP money and convert it to Roth TSP. This way it will not be counted in my RMD. Well, it is in the future, but in a year that you have an RMD due, like now, the RMD, let's say this year is due by December 31st, 2000. You got to take out that RMD by December 31st, 2026. If you're going to do a Roth TSP in-plan conversion, you first have to take out the RMD. You got to first take out your traditional TRMD before you can perform that conversion. You can't do it afterwards.
Gotcha.
In fact, the TSP is not going to allow it. The TSP won't even allow it.
That's a vital point to bring up there. Now, Ed, your next one, I guarantee you nobody knows about this. And that is something called a leave behind amount. So what is that and how does it work?
I went through the various sources of vested traditional TSP account. We talked about direct contributions via payroll deduction. We talked about matching contributions, and by the contributions and accrued earnings, the matching contributions for FERS employees and accrued earnings. Let's say they've been in the government for more than 3 years. A FERS employee's been in the government for more than 3 years, so they're vested in their 1% in contribution. And we talked about the rollover amounts from other retirement accounts, traditional IRAs. When a traditional TSP participant performs a Roth TSP contribution, then there has to be after that conversion, there has to be left at least $500 left in that account after the conversion, with the exception of the rollover. The rollover money, you can convert all of it. There's no restriction as to come out. You can leave zero behind. But the other accounts, you have to leave a minimum of $500 in each account after the conversion.
That's an important tip. And Ed, one last thing. What about the TSP mutual fund window funds? Can those be converted?
No, the answer is no. A traditional TSP participant can only convert money invested in TSP funds. That is the C, S, I, F, and G funds, or the life cycle funds. Any traditional TSP account, any traditional TSP money invested in the TSP mutual fund window cannot be converted to the Roth TSP. So what do? Any traditional TSP participant who wants to perform a Roth in-plan conversion with money invested in the TSP mutual fund will need to sell shares and then request a transfer back to the TSP core funds, the CSI, F, and G funds, before they do the conversion.
Wow.
So they got to take that first step before they can do the conversion.
Got it. Well, brother, this has been incredibly helpful. This is big news for our feds and retirees who have been waiting for this option. Now, remember, folks, this is part one of a two-part series, so don't forget to come back for the other side, because Ed will help us work through the important questions you need to ask before you decide to convert, as well as talk about 2 different 5-year rules that you need to know about. Ed, I know you were kind of champing at the bit to get to this and went through all your pads and pencils. But once again, I have to thank you for doing this on behalf of all the feds. I'm not sure who else is going to this level. I certainly haven't met them. So thank you so much.
My pleasure. My pleasure. Thank you.
Folks, that's a wrap. We are serving those who serve. So be sure to hit that subscribe button for this podcast on either YouTube or Spotify. And please remember to share it with your friends and strangers. Don't forget our live webinars pretty much every single week. You can go to swserve.com. You'll see the webinar button. Click it. It gives you the whole menu. Yes, the guru will come to you, reach you where you are, teach you where you are, and above all, serve you where you are. Sign up for one, sign up for all. And please share the page with friends. They will thank you. And don't forget to read Ed every single week in the Fed Zone. That's fed-zone.com. And signing off, as I always do, for Ed, the crew at Serving Those Who Serve, and me, Dan Sipe, I want to say in this new year, good luck, Godspeed, and above all, remember, it's your Fed life. Please make it a great one, because you deserve it. Stay well, everybody. We are out. Don't forget episode 2.